Well, all good things have to come to an end. Well, a temporary end at last. We have Blackrock selling Bitcoin and Ethereum. The big question is why? Why did they dump huge amounts of Ethereum and Bitcoin? Well, I have a very interesting theory. In fact, I'd even go as far as to say that I don't think it's a theory. I think this actually might be true. So hit that like button and subscribe to the channel. Remember, we break down all the latest news and we cover what no one else is, making sure your portfolio is absolutely dialed in this bull market. With that being said, let's find out exactly what's going on with Blackrock and their Bitcoin. Okay, so it was always going to happen. We were eventually going to see Blackrock, or certainly Blackrock's customers, start to sell off some of their Bitcoin. We've had an onslaught of buying pressure coming in, but what's interesting to note here is it was only a select few, led by iBit, with over 2,453 Bitcoin being sold, and actually Ethereum numbers were pretty strong as well. Now, some did buy though, Fidelity buying as well as ARC21, Grayscale Mini, all actually adding to their position. So a lot of questions now has to be why? Why all of a sudden did Blackrock flip bearish? Well, we have to look at the macro side of things to understand it, and more importantly, just get a view of who actually is investing in the iBit ETF. Well, the reality is it is just everyday people with a bit more money than you and I maybe, but they are just holders at the same time. They just don't want the exposure to the traditional asset Bitcoin. So client redemptions, ETF outflows are very much one of the biggest factors. In fact, largest outflows in weeks are generally driven by client redemptions. People saying, look, I don't want to be a part of this anymore. I want to take some profits off the table. I think the market's going to go down. And the reality here is the last time we saw this and then saw outflows from Blackrock, the market pumped over 2 days later on. The market dynamics, so what's going on? We saw the market pump down. We saw Trump obviously talking about tariffs. Markets don't like that. There's lots of debate going on about the Federal Reserve at the minute and whether Jay Powell is deliberately holding off rates to stop innovation in the crypto market. But there is one other point that I think is probably the most likely cause, and we're going to break down exactly why in a minute, is the repositioning or strategic rebalancing. Now, it's important to reference here, in-kind redemptions are available, so people can take their Bitcoin away from the ETF. This has been approved recently by the SEC, and basically, like I said, allows people to basically just get their Bitcoin off it. But I think there's something a little bit more. I actually think this is one of the key things, which is the in-kind redemptions, and the other one, the SEC liquid staking protocol statement. We're going to talk about that in just a minute, but overall, I do want to just reference here that I actually think this is just a normal move in the markets. Maybe they're trying to push it down a little bit. Let me show you a couple of interesting charts. Check out this chart. Bitcoin addresses with over 10,000 BTC did see a sharp decline over the last couple of days. Pretty obvious. We saw, again, big institutions dumping their bag. Guess what? We see wallets with under 100 Bitcoin skyrocketing. So now there's a rotation of capital out of institutions and into, well, whale wallets or bigger companies. And actually then we see the long-term holder supply increasing as well. Very interesting things. We see mass dumping at a macro level for institutions, particularly around ETFs. But then at a micro level, we know that this is being bought up significantly by whales, whale groups, hedge funds, much, much more. So very, very interesting indeed. And I think part, like we said, is due to this in-kind redemptions. But this is what you are here for. This is what I think is the big moment. And when I talk about repositioning of capital, we know that Blackrock is a big mover in the space. They basically control things, and I think this is why they are repositioning capital. So Paul Atkins today called the Federal Regulator's Division of Corporate Finance statement on liquid staking protocols a significant step in the right direction. Basically now, we are going to be allowing staking activities, and they do not constitute a securities under certain circumstances. Now, for many of you that have been watching this channel for a while, we've been talking about how Solana, XRP, as well as Ethereum are going to be getting staking protocols attached to their ETFs, basically allowing them to earn money. Well, at the minute, the Blackrock ETF for Bitcoin won't be able to do that. The Ethereum won't be able to do that. They have to convert. In order to convert, they need to seed potentially a new ETF. And that's exactly what I think is going on. I actually think, and again, you have to put your tinfoil hats on, people, but let me know in the comments if you agree. I actually think this is a group of investors that are coming out that are going to seed a new ETF, which is going to be a staking ETF, and I think it's coming next week. All right, there's my balls on the chopping board, but I think it's coming. We've been talking about this for the longest time. The fact the SEC have done this, and I talked about them accelerating their ETF sign-offs, for me, tells me that's exactly what is going to happen. The official statement came out here, and I just want to reference a couple of key things here. It says, in the division's view, that liquid staking activities in connection with protocol staking do not involve the offer and sale of securities with the meaning of Section 2A1 of the Securities Act of 1993. Basically, if you go over to MakerDAO or you go into your Phantom wallet or wherever it is to stake Ethereum, Solana, Bitcoin, whatever the hell it is, you do not enter a securities contract. And this is a monumental decision. And it isn't getting the airtime it deserves, by the way, but this is actually a pretty big deal. Now this unlocks XRP ETFs, it unlocks Solana ETFs, and like I said, right at the very start, it unlocks the potential of an Ethereum ETF with staking attached to it. And I think Blackrock are going to jump the gun. We know Fidelity are generally second place to them. The fact I think now Blackrock are seeding it. Think about it. 2,543 Bitcoin. What does that get you? To about $300 million for a potential new ETF in which you are going to be staking it. Watch out. I think next 24, 48 hours, Blackrock are going to buy an enormous amount of Ethereum. And if that happens, you heard it here first. That's exactly what they're doing. And staking on Ethereum ETFs will be here next week. So let me know what you think of all of that in the comments down below. As always, a red day in the markets. However, optimism I'm sure is going to return very soon. Watch out for that Blackrock buy on ETH. As always, thank you so much for watching the video. Hit the like and subscribe button, and I'll see you next time. Bye-bye.